You look at Deere, you look at some of the good things out there when it comes to earnings. Do you want to go heavy equities in the U.S., or is it now time to tail off some of your appetite for it?
So I think what's interesting about the U.S. economy and actually the global economy is there's a very stark difference between the investment side of the economy, where there is still a weight on business investment as a result of all the policy uncertainty we spoke about, trade being one of them, and more the consumer domestic demand aspect of the economy. So when we look at U.S. equities, we don't want to be buying everything at this point in time. We want to focus a little bit more on that positive domestic demand story. Now, if we get a big change, a big lift in the global economy, a big lift in business sentiment, then perhaps we can start to think about being a little bit more positive on something like industrials.
So talk to me about earnings, and you mentioned trade a little bit, because in my terminal here at GTV Go, we've seen quite a big divergence between gross margins, which are holding in there. Companies are able to sort of write off the tariffs, pass on those higher costs of goods sold to the consumer, showing some pricing power. But the operating margins, the spending, the capex, the R&D, that's where you're really starting to see pressure within U.S. Equities coming out of earnings. What do you make of the earnings season so far?
It's been interesting. I mean, I think one of the most interesting things about it is the fourth quarter is the first time that we're starting to see a fading from the tax cut boost. Now, it's interesting if we think about fourth quarter 1 year ago, right, 2017, the tax plan had just been announced. Companies were already factoring that in. Their effective tax rates had already gone down. So this is the first time where the comparison is harder, and you're getting a fading boost from that tax cut. So I think that might be some of the dynamic that's happening with margins as well, is some of that fading, which we'll continue to see this year. So ultimately, I think, of course, there is going to be a slowdown in earnings growth this year, but revenue growth still hanging in there. We think we can do about 6% earnings growth.